After a long goodbye from former CEO and executive chairman Robert Iger, officially leaving the company on December 31st, 2021, 2 years after he was going to retire, Bob Chapek is now, of course, fully in control of the Walt Disney Company. We're 4 weeks into his official full hold as CEO, setting a new direction for the company. And as is the case commonly with large regime changes like this in big companies like Disney, a lot of folks will follow that former CEO and chairman out the door into retirement as well. What seems to be a little surprise is that we have a new investor relations senior vice president in Alexia Quadrani, replacing Lowell Singer, who'd been there quite some time as well. Alexia Quadrani comes from J.P. Morgan Chase Bank, somebody who knows her way around Wall Street to be sure. She came to J.P. Morgan Chase Bank in 2008 when they acquired control of many of the assets and personnel from Bear Stearns during the financial crisis. Well, she will now be serving at the pleasure of the board and the CEO, Bob Chapek, at the Walt Disney Company, becoming a liaison to the big institutional investors and global investors in the Walt Disney Company. I think personally this is a very smart move on the part of Mr. Chapek. This is another one of these personnel changes. We're probably going to see more as time goes on, but of course, we want to discuss it. We want to talk about who Miss Alexia Quadrani is. Also, if you missed Sunday afternoon's video about the streaming war data that we got from Nielsen recently regarding the final week in December and into January regarding Boba Fett and Cobra Kai, Disney's Encanto, we had a good video on that yesterday with lots of information. Unfortunately, I made the mistake of releasing it on a Sunday, and YouTube didn't care for that too much. So I would urge everybody to go watch that video. There's a lot of data in there that really does kind of relate to what we're talking about in this video with Cameron, so make sure you check that one out as well. Link will be in the description below. And I'm joined, of course, once again today by my good buddy Kamran Pasha to discuss all this. Now, Cameron and I recorded this several days ago. We're just putting it out now Tuesday morning, so some of this news and information you've probably heard, but probably not in as much depth as we're going to cover today. And before we get into that, I also want to make mention of our first live stream will be on Thursday night, celebrating the 1-year anniversary of this YouTube channel. I want to thank everybody out there. Check it out, 6 p.m. Central Standard Time. We're just going to goof off and have fun, but make sure you stop on by. And if you missed that, make sure you subscribe to the new live stream archive channel, Renegade Online. That is up and running. Trying to get the subscribers up to 1,000 as quickly as possible. Of course, content will come in as the live streams close out each week, and we load them onto that page. So if you miss a live stream, you can catch a replay on Renegade Online. So without further ado, let's get into this. Here we go. Online. All right, folks, welcome back. Another great day here at Valiant Renegade, and I am joined by my good friend once again, Kamran Pasha. Make sure you check out Cameron's Patreon page. A link will be in the description below, as always. And today we're talking about some news from the Walt Disney Company. Specifically, they have decided to bring on a brand new senior vice president of investor relations. We're going to talk about that what that position entails. And her name is Miss Alexia Quadrani. Now, she comes to the Walt Disney Company from J.P. Morgan Chase Bank. She has been a senior analyst there for the media division. So when you look at, banks like this, investment companies, they have different analysts that cover different industries. In this case, she covers the media side, and she is now coming into the Walt Disney Company, as we said. So I think that's a pretty good move for them. We're going to talk about some of the stuff, that goes into this, what this means. So, Cameron, how you doing today? Glad to have you back.
It's always good to be on. Thank you for having me on your channel. I think our videos are really well received by your members. And if you haven't signed up yet, please join this incredible channel. Hit the like button. I think we're providing some very interesting commentary on the economics of what's happening in Hollywood that I don't know that anyone else is doing. And I think this video in particular, I think we're going to be able to provide some insights that not a lot of people on YouTube are going to have about this situation that's happening.
Yeah, I hope so. That's what we always try to do here. The motto of this channel is we try to put the Hollywood and entertainment industry through the business and financial lens of reality. And of course, if you're like the 60 or 70% of the folks out there maybe watching this video that are not yet subscribed, please hit that like and subscribe button today. Share this sucker out. And do leave a comment before you head out below the video. We'd love to get feedback. Cameron and I both, we try to respond as much as possible to some of these comments. But of course, as these videos have grown, we've been getting so many more comments. It's hard to keep up sometimes. So bear with us, folks. But yeah, so here we are. The news has come out about this new senior VP of Investor Relations, Alexia Quadrani, and she comes from J.P. Morgan. I think this is a really smart move on the part of Bob Chapek because, as we're going to discuss in this video today, there have been a lot of promises made over the years, a lot of money spent by Mr. Chapek's predecessor, Robert Iger.
A lot of money borrowed by Mr. Iger.
A lot of money, well, yes, a lot of money spent that was borrowed, no doubt. And much of that money came, I'm sure, from, no doubt, the J.P. Morgan Chase Bank. But that being said, to the tune of almost $90 billion buying up properties over his tenure as CEO and chairman of Disney, like Pixar, like Marvel Studios, like Fox, of course, and as we always talk about, Lucasfilm. So Chapek is now in the driver's seat. He's 2 years into his contract as CEO, but he's really only gotten control of Disney in the last 4 weeks or so. So we're really just now starting to see what Chapek is going to do. We've talked about that here, you and I, on this channel before. We've discussed, of course, his memo right out of the gate early this year, and it became very obvious, to me at least, that he did not feel like that he had the wherewithal before the first of this year, before Robert Iger left as chairman on December 31st, to really start setting his direction, at least publicly. We're seeing that now. And we've seen Alan Horn retired, who used to be the chairman of the Walt Disney Studio system. We have now seen Bergman take that chair solo. We have seen other changes like, some of the heads of the PR that have left. And that's kind of normal. You have a regime change like this. A lot of people that have been with somebody like Iger for the last 10, 15 years, they're going to follow him out the door. Well, the old investor relation person has now departed, and the new investor relation person is in, somebody coming direct from J.P. Morgan. So, Cameron, walk us through this. What do you think about all this right now?
Well, let's talk for a second about the predecessor that's leaving. So the gentleman's name is Lowell Singer. I hope I'm pronouncing that correctly. Lowell or Lowell. I'm thinking it's Lowell Singer.
I think it's Lowell from what I know. Yeah.
So Lowell Singer. So this gentleman was the investor relations head for much of Mr. Iger's reign, and he's out the door essentially 4 weeks after Iger is gone, right? And this was reported first in Deadline, or at least that's where I got my information, and then I put it on my Patreon. I started talking about it, but it's. Even Deadline notes that this gentleman, Mr. Singer, who was there in this role previously, was not just a public relations flack with the investors. They actually played a major role in providing advice to Mr. Iger about strategically how to move forward. And apparently, they were part of the brain trust, if you could call it that, of people that decided that the best way for Mr. Iger to capitalize on Disney was to just borrow a lot of money and buy external properties like Lucasfilm, Pixar, other things, bring all these under the thing, and leaving the company with a tremendous amount of debt. And then when you had instances where some of the projections for the investments, such as Lucasfilm, I saw projections when Lucasfilm was first purchased or announced to purchase back, 2012? I saw financial projections from people like these analysts that we're discussing. I saw financial projections in the announcement that had said they're going to have a trilogy, a new Star Wars trilogy. So I, at the time, saw a financial projection from one of these Wall Street analysts saying, well, based on our analysis, the first movie in this new Star Wars trilogy should make about $2 billion, right? The second movie should make $2.5 billion, and the third movie should make $3 billion. And that was the expected thing. What actually happened was the other direction. You had first movie hit the target, $2 billion with The Force Awakens. Then the second movie, The Last Jedi, hits $1.3 billion, almost fully 50% of the projected target from Wall Street analysts of where it should have been. And the third movie, The Rise of Palpatine or The Rise of Skywalker, whatever it is, the third movie was at $1 billion, which is a full 1/3 of the expected. And people can say, well, those were unrealistic projections. No, they're not. They're not. And we saw
not in the same year as Endgame. No.
Exactly.
Endgame came out and chunked out almost $2.8 billion. And this was Star Wars, which one could make the argument that Star Wars should have been even bigger.
Should be bigger, a more global property, longer standing, multi-generational.
Yeah.
So those were not, those were projections by people, like Ms. Quadrani, who were putting those out there, and it didn't play out that way. And going back to Mr. Singer, he had advised Bob Iger that we just use leverage, borrow stuff. We're going to make so much money off of Star Wars and other things, it's going to easily pay itself off, right? Didn't play out that way, and so so now. The very fact that Deadline would even mention this, there's no reason to go into detail in this article about a new oncoming person, but pointing out that they were behind the strategy, which they don't say it, but the objective reality is the strategy was not financially to the benefit of Disney because it didn't play out the way they thought. And Mr. Singer's out now, and you have Ms. Quadrani come in. So now you're having somebody come in who was like those Wall Street analysts that had certain expectations. And I think you have certain videos you're going to be showing here of the expectations she had. And she's no way an enemy to Disney. She wants it to succeed. We can see from her interviews. Her company, her projections, JP Morgan was overweight, meaning they put more in Disney than perhaps other areas of their investment portfolio. Normally they would. That meant they were very bullish and optimistic about it. From one of the videos that I've seen at the time, Disney stock was 2019, when just before the Disney Plus streaming was about to come out, the stock was about $127 at the time. She projected it was going to go up to $150. I believe it did and exceeded that. But now here we are, a couple of years later, 3 years later, and it's back down to $128, $1 away from where it was when her great optimistic predictions were done. So the direction of the stock has not gone in the bullish direction that Wall Street analysts, and JP Morgan is actually a very conservative company. Mm-hmm. They're not speculators, and she was very conservative and restrained in her commentary on these interviews at CNBC and other places. So they probably, in my opinion, they probably had higher expectations than 150, but they put that out there, and now we're back down to where it was. It's not the direction investors who are putting billions of dollars into these equities want, and so it's not a surprise to me that the person replacing Mr. Singer is the person that was supposed to be watching what Mr. Singer was doing and probably raised alarm bells saying this isn't going the way we thought.
Yeah, I think all that's a good observation, and just from the standpoint of the trajectory of Disney's outstanding share prices in the last 2 years and 4 months or so at this point, since that launch, since one of those interviews with Ms. Quadrani on CNBC. It did run up quite a bit. I mean, it did make it. It broke the $200 barrier, which was great. Now, of course, a lot of that centered around the excessive rate of growth that Disney Plus had. Of course, during the pandemic era, people were forced to stay at home. Streaming services in general went up through the ceiling, including Netflix and places like that. But of course, what has happened and what we've talked about since then, and especially as Mr. Chapek has discussed on the earnings calls that we've had in the past, obviously their issue has been the new content production has been heavily delayed due to those same reasons with pandemic lockdown. Basically, as great a job as the pandemic lockdowns did to boost the Disney Plus subscribership numbers, at the same time, it absolutely flatlined the production capabilities to create new content.
Yeah, because you have all these restrictions on how you can do it, how many crew members can be there, who can be physically present in a shot. It makes it very difficult to produce television or movies.
It does. It does. And, one of the things that we're seeing kind of change at this point has been that they're getting back into that. One of the things that Chapek has mentioned in previous investment calls has been that they have somewhere around 300 plus new projects that they're working on for Disney Plus. Now, of course, most of these are never going to be seen in North America. A lot of these are regional content type programming that is going to be handed off to those areas of Disney Plus. We know a lot of their subscriber growth in the past 6 months or so, 8 months or so, has been coming from India, where the average revenue per user is far lower than what we have here in the States. And kind of all this is compiled at this point. So Disney's kind of at that crossroads. But here's the interesting thing, is that the promise that Disney made from the get-go, that they could reach 250,000 subscribers by fiscal year 2024, I believe it was, which is also the same point, or if maybe fiscal 23. It was around the same time that they projected that Disney Plus would cross into profitability. That wasn't made by Bob Chapek. Let's face it. Bob Chapek is now, this is one of the things where Robert Iger promised X, and now he's gone. And Chapek has to kind of jump in and at this point try to fulfill the promises that came before him, as reasonable or as unreasonable as those promises may be. So we're going to talk about some of those today, but it doesn't surprise me, getting back to the topic at hand, that somebody like Alexia Quadrani has been brought in because of her relationship with other investment bankers. She's been around the industry a while, especially coming from the biggest kid on the block like J.P. Morgan, that she was brought in. Basically, to me, I read this as this is a brilliant move by Chapek. He's trying to protect his job security at this point, making sure that the investors, the institutional investors, understand that, look, I've inherited what I've inherited. Now I've got to deal with it. You can't, don't blame me if things don't pan out exactly as it was projected a couple of years ago, because these decisions weren't mine. Somebody else's mouth wrote these checks that my butt now has to cash. Yeah. So what do you think about all that?
Well, I think the choice of Ms. Quadrani is both inspired and also inevitable, someone like that. Because we've said for some time that the major shift that we're going to see is because of the rise of Susan Arnold, who I like to call the Empress, who is now the new chairman of Disney, who officially took over January 1st. And we have been saying together on your channel for some time that here's a woman that comes not just out of the business world. She had a high level, I believe she was CEO of Procter & Gamble, or at least President of Procter & Gamble, about 12 years ago. And then she went on to work in the world of high finance, so that's the world she's coming from. She's coming directly from the world of the investors. So we had said she was the arm of the investors. And I had suggested that she probably is the one that pushed Bob Chapek, who was not really in line for the succession. He wasn't someone Bob Iger wanted or was his protege, and he wasn't someone that Hollywood was even ready for. They didn't expect this gentleman from the parks to take over. So I knew at that time someone else is pushing this, and it was clear that it was the investors that were pushing this. And so if Ms. Arnold is coming from the high finance Wall Street world, right, and it's no surprise then that you'd have somebody who's serving a dual role here. Ms. Quadrani is, on one level, she's a liaison to the investors, but as we can see from her predecessor, she's also an advisor. What do you do with this, with the resources that we have, right? And so the fact that someone who's coming in directly from Wall Street, but not just from Wall Street, someone whose job for the last 14 years, I believe Ms. Quadrani's been at JP Morgan for 14 years, the last 14 years was to analyze Hollywood and specifically Disney. I mean, this is someone who's been objectively looking at the company and its choices for over a decade and giving advice to investors about whether they should buy stock or not buy. And so here's somebody who understands Disney inside out from an investor's point of view. So she's going to both serve as someone who can assuage fellow investors, because she's coming. They all know her. This is their. I've talked about the Hollywood Club, Valiant. There is a Wall Street Club, and she is definitely respected member of the Wall Street Club, right? And so now she's going to get on the phone at the next earnings call with her old friends, and they already trust her because they know she's been analyzing this company she now works for over a decade. And so they're going to listen to her when she assuages their concerns about the choices that Bob Chapek now faces based on, again, the checks that he didn't write, but now he has to cash, right? And so that's one. At another level, the investors are going to be heartened to know, because she's serving this dual role as also an internal advisor to Bob Chapek and Susan Arnold about how to handle their company financially. I'm sure even 6 months ago, I'm sure she's sitting there in her office, JP Morgan, looking at all the data, and I'm sure they're getting a lot of data that the average person doesn't have to analyze what's happening there. and thinking, I really think that I hope this is what they do with the streaming service. I hope this is what they do with their studios, because that's the way I can figure out that the numbers are going to add up and put us back in the black. That's someone who you now want inside telling that information to Bob Chapek. This is the road you need to do to get back in the black after your predecessor put your company in the red. This is an inspired choice and also an inevitable choice. No one else but someone like this can play this role at this moment in the company's history.
Yeah, I think like I said, I think it's a very smart move. I think it works great on her part to be here. Like I said, she's got the connections. And yes, there's a lot of things that I think that Chapek right now, and of course, he's not going to say these things publicly, to where, I got saddled with all this stuff from the last guy, and don't blame me. But he can't come out and say that publicly. He never would. But you got to read between the lines. You have to see what's going on here, and you have to understand, kind of the behind the scenes issues that we have to deal with, that Chapek is having to deal with. And when we see these kind of movements in terms of who he's hiring, who he's bringing in, we've talked a lot about in the past week, this rumor about Jon Favreau, a new creative executive position, all these kind of things that hopefully in that case with Favreau does actually, wind up getting confirmed at some point. And that came to us from WDW Pro again, which he had confirmed by two sources. These kind of movements are what we need to see happening to see the changes in Disney coming down the road, where things could wind up. And again, as we keep talking about to folks, you have to be patient. This is not something that's going to correct itself today or tomorrow or 2 weeks from now or even 6 months from now. These big changes you're going to see happen over the course of several years. So, and I apologize, folks. My camera is giving me some goofy issues today, so bear with me. This is not.
You're just going to have my lovely face on.
Yes, you're just going to have to look at Cameron and look at my avatar blinking as I speak. So
got a little background stuff going on behind me, so it's okay.
There's
something I wanted to give I guess by the time this comes out, it'll all be published on my Patreon. But it's something that I wanted to share on my Patreon. As I think I've mentioned before, I think I've mentioned on this channel that I had discovered that one of my Patreon members is actually a Disney insider, is actually an executive inside Disney. I didn't realize that until they started revealing that to me, and then they shared with me their reactions to Bob Chapek's memo, and they had taken that memo as something they had not seen before. This gentleman has been there since the Eisner days, Michael Eisner days. He's been there a couple of decades, and he had never seen that kind of language before. That Bob Chapek was saying, "We will not fight our audience." He said, "I've never seen anything like that in this sort of bland corporate memos that I've seen for years." So this gentleman also just sent me a message analyzing some of the stuff that's being sent to investors. I'm going to take a quick second here to see. This is a note, and I'm just trying to see exactly where it was said. It's a note to investors. Okay, so I'll say, I'm just going to quote this without revealing this. They've asked me not to reveal their name. Obviously, I don't want to get them fired, but this is what they said, and I'm going to write about this on my Patreon, so those who are members of our Patreon can read the article. But I'm just going to quote them. It said, "This week I received the invite for the upcoming shareholders meeting that will take place in March. The board will be fully ratified and certainly will be a very interesting meeting. I got very similar vibes to the final meeting under Eisner, so that's interesting. But the letters from Arnold and Chapek to the shareholders as part of that preparation for that meeting are very interesting." And he specifically focused on this. He quotes Arnold in her letter to the shareholders, quote, "The board is focused on the company's efforts to promote long-term sustainable business and to maintain a workplace in which all the employees and cast members feel welcome and supported," end quote. But this is the point that this Disney insider says. He says they give a lot of credit to Iger because, I saw that the letter says, "We thank Bob Iger for all of his service." That's a standard boilerplate. Thank you. Good luck. Thank you for all the fish. But it says Chapek says thank you, but then immediately goes on to say that he's excited to work with Susan Arnold since she brings deep experience and adept judgment across an impressive range of topics. And the specific thing that he says in these letters to the shareholders that he found of interest is that there's a lot of conversations about long-term value to shareholders. And he says this is different from the previous kinds of shareholder letters that he saw under the Iger regime, because in the past he was seeing lots of social justice platitudes, but nothing about value to shareholders. And he's not seeing social justice platitudes in this current letter, right? So I'm going to be putting all that on my Patreon and quoting this person, but that's revelatory as well. So all we're talking about is that the letter to the shareholders, essentially I got this email at the same time that we learned about Ms. Quadrani, that the letter to the shareholders is all focused about long-term value. They brought in someone who has been analyzing Disney for at least 14 years. And I don't know which company she worked for in the past. She may have been looking at Disney for longer than that at a previous company before she went to JP Morgan. But now all the social justice platitudes and hot air that were in previous letters to shareholders in advance of these meetings is not there. That's a strategic choice in language. And it means that's the focus now. We've got to bring long-term value back. We're not going to talk anymore about identity. We're going to talk more about profit now. That's an amazing change.
Yeah, it really is. I mean, that is incredible, because and that's the kind of thing that we have posited, thinking that was sort of the changes that we would see coming from Bob Chapek when he took over. That was going to be a different sense of direction, a different sense of attitude towards the company, towards the shareholders, towards the customers. And I know a lot of people out there still, oh, Bob Chapek's a cheap guy and all this kind of stuff, and he cuts costs in the parks and all this. But look, here's the bottom line. And this is what I keep trying to get across to folks, is that the largesse of the people that are still going to the Disney theme parks are pretty well satisfied with it, and they're pretty happy with their experiences there. Yes, the prices are going up. Yes, some of the services are being cut back. And yes, some of the services are being, quote, nickel and dimed in there. But as long as people still keep going to the parks and still keep paying them, and they still continue to, mark on their, at least like the new Genie app they have for the Disney parks, or they, do good responses on their surveys, things are going to keep moving in this direction, because what Disney has determined, what Bob Chapek has figured out, is that, as I talked about in a video last week, Disney has a tremendous amount of price elasticity. They can do these things. They can make these changes. They can raise prices. They can do this. And they will still continue to have more than enough demand for their products and services that exceeds their capacity to supply. So, I mean, you can only fit so many people in a park per day. You can only do so many this or that. That demand continues to exceed that supply. So, I mean, this is where Disney understands this, and they still have a wealth of customers that are very happy with the way things are going. But it's good to hear that, Chapek is trying to get back to producing that investor value, and long-term investor value. That is a big deal, because that is a stark contrast to what we've heard. Because we know when Chapek came out last year and did his Goldman Sachs conference, he talked about looking at the data, understanding what audiences want, delivering what audiences want, going back to focusing on a distribution model, right? And then Iger comes out immediately and kind of underhandedly cuts or refutes that statement by saying, well, I hope they don't go by just the math and the data. I sure hope they just let creatives do whatever they want. I'm paraphrasing, but that's basically what he was saying. Well, we know that when you just let creatives, quote unquote, do whatever they want, you wind up spending hundreds of millions of dollars on products that audiences aren't flipping buying. Well, at least not in large enough numbers to support the expenses.
Yeah, what kind of creatives? I mean, that's the thing. When Iger had proven in his reign that he considered any artsy fartsy weirdo, who had a subversive idea to be a creative, right? Where someone like a Jon Favreau, understands what the market wants. He's very creative. He is a creative, a filmmaker, he's an actor, he's an artist, but he understands how to entertain people. And you had other people that came in, like Mr. Rian Johnson, who is a talented filmmaker, but then decided, I'm going to use my creative vision to subvert things, and I'm happily publicly saying I'm happy to divide the fans using my creativity. That's certainly an interesting artistic stance. It's not a commercial stance, and so
I liked Knives Out.
Was permitted under Iger.
Yeah, I like Knives Out. I really enjoyed that movie. I know some people
I like
didn't.
Looper. I like Looper. Looper's a good movie.
There's some stuff that Rian Johnson's done that I've enjoyed. That doesn't mean that he's going to be a great Star Wars director. And
certainly when you have an agenda, when you have a creative agenda that seems to be about making an art film, rather than making an actual traditional Star Wars film that's commercially oriented. And so when Mr. Iger made that comment, he's actually in some ways trying to defend his willingness to give billions of dollars to people that were only thinking in terms of their personal artistic interest and not balancing that with commercial interest, right? Which someone like a Mr. Favreau does. And so, because I think, unfortunately, the way he presented it was that it's artists versus business people, and that's not true. I think most artists want to be commercially successful. Most artists don't want to be obscure, strange people that are, that are not seen by the public or appreciated by the public. And the only people that have the time to be artists like Mr. Johnson are people that have already proven themselves. Had Mr. Johnson been making not commercially viable movies, he would never have been able to get to a place of being in front of Star Wars. His previous movies were commercially viable, right? And then he chose to make one that was an art film. That's a choice. It's not a choice that a CEO of $1 billion corporation should be facilitating.
Yeah, and this all harkens back to how the conversation started, because all this information is critical to understand, again, why somebody like Alexia Quadrani was brought in to fill this role. Because, and I want to talk about this because, she is the one that has to speak to these other investors. And on that end, when we talk about investors, this is mostly the institutional investors. These are the ones that have the largest block of controlling voting interest, voting Disney A shares of common stock, that controls who sits on the board, who the CEO is, who the chairman of the board is. So if you look at the top 20 institutional investors, of course, they're all big banks and mutual funds. It starts with Vanguard. It goes to State Street, Blackrock, folks like this. And these are big mutual fund companies that, frankly, a lot of folks out there watching this video right now, even if they may have never heard the names, they probably have money in their funds. They probably have, in turn, money in Disney stock, because like most people out there, if you've got a retirement account, if you've got a 401k or an IRA or something along those lines, you're probably invested in one of these mutual fund companies, different funds. So if you've got a BlackRock large cap growth or a Vanguard S&P 500 index fund, hey, guess what? You got Disney. And those mutual funds that are the custodian of your hard-earned money for your retirement, they are voting on your behalf as somebody who has deposits in one of their funds. They're voting those Disney shares on your behalf. Those top 20 holders hold almost 40% of outstanding Disney stock. They have the largest controlling interest stake there. They are the ones that put in somebody like Bob Chapek. They are the ones who put in the board of directors. So again, this is why somebody like the board and Chapek are going to want somebody like Ms. Quadrani, who knows all of these people. She is friends with Vanguard. She is friends with BlackRock and State Street and T. Rowe Price and on and on and on. She has direct lines of communication to these people. That is absolutely positively somebody you want to be, for Bob Chapek to be able to call up Alexia on the phone and say, hey, look, this is where we are. This is what we're doing. Make sure that our largest voting audience out there is, they understand this is the predicament they're in, or we're in. This is where we are going. And she has those good relationships after all the years she spent at JP Morgan to be able to convey that information and get to sit down and have lunch and have dinner and get on a phone call at 8 o'clock at night or something with the chairman of Vanguard or stuff like this. They listen to her. So that, look, this is a great move by Chapek. And it's just, again, it's another one of these things. And I will predict right now, Chapek's contract comes up in February of 2023, about a year from now.
Yep.
Short of him burning down the Magic Kingdom in Orlando, he ain't going nowhere, folks. Disney has had,
he remains healthy and it does the whole, we're not hit by a meteor. He's renewed.
Yeah, exactly. And I mean, Disney is not a company that lightly changes out major positions. They have had 7 CEOs of Disney to this point. Of course, the longest tenure was Walt, and you had Rowe, and then you had other folks on down the line till we got to places like Michael Eisner and then Robert Iger. You think about it, Michael Eisner and Robert Iger, that represented 30 years worth of Disney alone right there, just with those two. So Disney does not change captains very often. So Chapek is going to be given a wide berth. they understand, and a lot of people think, oh, well, Star Wars, Galaxy's Edge, and the new Star Cruiser Hotel, well, that was all under Chapek's watch. No, not really, because even though he was in charge of the theme parks at that point when those things were getting built, let us not forget that it was publicly released, leaked, whatever you want to call it, by Disney Imagineers that said, hey, we had Star Wars Land already figured out. We had spent months and millions of dollars of capital and time developing Tatooine and Hoth and Endor, and that was going to be Star Wars World. And then Iger walked in and said, no, we're not doing that because, Kennedy wants to do new Star Wars stuff. They want to do Kennedyverse. They wanted to do stuff from the sequel trilogy because, of course, they didn't want to cater to the 50-year-old crowd. They wanted to cater to the new Star Wars fans, of which clearly there are not nearly as many when it comes to the sequel trilogy. We've seen the merchandise change, going from sequel trilogy to Mandoverse and classic Star Wars almost overnight. Watch channels like Drunk 3PO, and Park Hoppin' and Lorena Creole, the people that cover, Pirates and Princesses, all these guys, thatparkplace.com, the people that cover the parks, they all saw it happen. The merchandise changes overnight. Chapek had the plan, the Imagineers for the parks to do Star Wars Land, and he was basically sidelined. I mean, there's really nothing you can do when the big boss, at that time, Robert Iger, comes in and says, listen, we know y'all put this together, but we ain't doing it. We got another idea. And Chapek just has to sit there and go, probably don't like that idea, but what can I do? I mean, he
has to execute, what he's been ordered to do. And that's what I think a lot of people don't understand. This wasn't his idea. He wasn't involved. People in Hollywood didn't know who this guy was. He wasn't sitting there in decision-making things about how Star Wars, what the storyline was going to be and how the brand was going to be promoted. He was a guy who was told how to execute it by higher ups. He wasn't in the line of succession from Hollywood's point of view. He was just a functioner for the line of succession. And when he quantum leaps that line of succession, that told me, okay, something's happening here, right? I'm sure he expressed dissatisfaction with what he was being told to do. If nothing else, his Imagineer said this is crazy, right? And what are we being asked for throwing all of our plans out for this untested thing? But he implemented it, and now he has to face, the fact that it's not working as probably he knew it wasn't going to work. But I want to actually go for 1 second back, Valiant, to link that to what you were saying about Ms. Quadrani, which is what most of this video is about. Ms. Quadrani serving as this liaison to the investors. We should remember, this is also, because of who she is, it is a two-way street. She's a liaison from the investors back to Chapek and back to Susan Arnold, because being someone who was just a few weeks ago on the investor side, analyzing and probably quietly critiquing things that were happening, and maybe on calls with Chapek saying, I just want to let you know my boss at JP Morgan isn't happy with this, right? She's going to continue that role, because if there are mistakes made down the line, my understanding of her predecessor, he was there to serve essentially as the spokesman for Bob Iger's vision and convince the Wall Street community, it's good that we're taking all this debt. You got to trust us on Star Wars. You got to trust us on where Marvel is going, right? Mm-hmm. I don't think that's her job. Her job is to communicate Chapek's vision and explanation for why he's doing things. But if she's getting feedback from her former colleagues in Wall Street, we don't like this. She's going to bring that feedback back, and it's going to be taken seriously. We didn't have that two-way flow of information under Iger. And that's why the investors got increasingly angry and agitated, and that's why they were able to push up Bob Chapek and ultimately, his superior, Susan Arnold, because they're like, you're not listening to us, we're going to take back control of the company.
Yeah, no, you're completely right. And I mean, when you look at things like we kind of open the video with the expenditures they've made on the M&A, that's mergers and acquisitions, folks. When they buy things like Fox and Lucasfilm and Pixar and Marvel and blah blah blah. And we kind of touched on this Friday, on Midnight's Edge, talking about definitely the merger and acquisition, the purchase of Marvel was a success for Disney. They managed to make a bunch of money at the box office. They made a bunch of money on secondary and tertiary sales in those markets in terms of DVDs, Blu-rays, licensing out to other avenues, like when they had the licensing deal with Netflix that was worth billions of dollars of licensing to Disney for that family. Lucasfilm obviously has not gotten there yet. I think that's one of the big things. that going forward in the next few years, this is going to be a big push, and this is part of the reason, like one of our previous discussions, why Blood and Bone was just jettisoned right out the window, because it was no, we're not taking on any new projects. We spent $4 billion on Lucasfilm to do Star Wars, and we really haven't crossed the profit threshold. And I know this is, for some people out there, you know, it seems like, well, that's impossible. Like, no, it's really not. When you break down the numbers of what Disney would have actually taken home in theatrical revenue, subtract out their costs of not only production but marketing, and we know 3 out of those 5 films, Kathleen Kennedy absolutely, completely mismanaged the production of, to the point where they were going back and shooting 50 to 80% of these films over again, going way over budget. Then when you talk about, you know, spending $1 to $1.5 billion building out the 2 Galaxy's Edge parks, you talk about all the additional expenses they had, you know, creating the merchandise. I mean, yeah, they've sold some merchandise, but the bottom line is that Disney still has not been able to really recoup its original $4 billion investment.
Yeah, people don't realize that. People think that they're in the black with Star Wars.
No, they're not.
Star Wars.
They are absolutely not, and there's no, I have not seen anything in the financial data. And some people look at it and go, okay, well, you know, Mando's real popular, and maybe Book of Boba Fett by the end of the show will be real popular. We're going to kind of close on that topic, so stick around because that's important. There's a couple of key things there I want everybody to understand. But there's real value that winds up on a balance sheet and a profit and loss statement, like theatrical revenue, like licensing out to things like Netflix, like Disney used to do, like Blu-ray and DVD and 4K sales and physical media sales. There's merchandising sales. That has a direct financial impact. That shows up in cash flows. That shows up on a balance sheet. That shows up in a P&L statement, a profit and loss statement. Impact value is a marketing value. It's an R&D value. And impact value on things like even Mandalorian and Book of Boba Fett and all these Marvel shows that they put on Disney Plus. To be able to sit there and say that, well, they've done really well, so it's made Disney money. Well, yes and no. I mean, there is no direct impact. You cannot trace a dollar spent on Disney Plus to one show. But they do calculate, like Netflix does, they calculate impact value based on how much of a given subscriber spent their time that billing cycle, that month, watching what content they did. And they could say, okay, well, out of that $8 they spent that month, they spent 50% of their time watching Book of Boba Fett, so we can assign that $2, $3, $4 of that, whatever assignable value they have. Netflix does that, HBO Max does that, they all do that. The difference is that, again, that's not real revenue to that project. So when Disney Plus wants to put a show on from Lucasfilm or from Marvel, there's an internal accounting switch. And not to get too deep in the weeds, but basically what it says is, you know, Disney Plus LLC writes a check to Lucasfilm for $100 million to produce Mandalorian Season 3, or to Marvel to produce Hawkeye, or something like that. There's an internal accounting shift. There's no new outside revenue coming in to build those shows, like when they make a movie like Eternals or Shang-Chi or Avengers Endgame, that goes into a theater. There is actual direct revenue there. Even when you look at other streaming services like HBO Max that actually have a subscription-based tier, or Discovery Plus that has a subscription-based tier, that's more easily trackable because they sell ads on those things. And you can directly attribute, just like linear television, if you watch a live sporting event, you can say, hey, NBC might have spent $5 billion buying an NFL contract for certain games, and they generated in ad sales for those games direct revenue of $10 billion. We know there's a metric right there that's hard. It's not an impact value. It's not a phantom value. It's a real hard dollar value. Disney has not been able to get there yet with Disney. And again, Disney Plus is still not profitable, folks. It is not projected to be until at least another 2.5 years at this point, and that was from the get-go. They're still not making money on Disney Plus. So again, this all harkens back to Lucasfilm still has to cross into the black from its original investment, plus all the capital, $4 billion on buying Lucasfilm, and then another easily $3 billion or so they've spent since then making movies, making content, making the theme parks, so on and so forth. So they still have a long way to go. But lastly, Cameron, let's talk about this, because I don't think it's any coincidence right now that the Book of Boba Fett is scheduled to close out its 7-episode run, and the final episode will drop 14 hours right before the next quarterly meeting of the Disney stockholders for their quarterly report, February 9th. So February 9th, 2 a.m. Central Standard Time, U.S., Book of Boba Fett final episode drops. And at 4 p.m. that same day, that same afternoon, we get the next Disney stockholder meeting. No coincidence. I mean, they need to go into that meeting with a bang.
Yeah, and they planned it out. I mean, they planned out this release date knowing exactly when this final episode is supposed to air. So that means when they had the show in the can and they knew what they had, they strategically planned it to come out so that the final episode of this series would appear just a few hours before this meeting. And hopefully it's because they expect a massive public outpouring of love because of something, and we'll talk about what it looks like is about to happen, stuff that we've guessed, but now I think they're actually leaking it. And we should keep in mind that last year they had a disaster because just before the shareholders meeting around this time of year, in February of last year, I think maybe it was 24 or 48 hours before, Gina Carano was let go, and then they had some unnamed PR person, Lucasfilm, saying they had no intention of bringing her back. That was a disaster to come out. That was not a plan. That was something that Miss Kennedy, or whoever made that decision, probably Miss Kennedy, did that screwed up their plans for a very calm, relaxed PR situation at the shareholders meeting, and a very agitated audience. Now they even though many of us as fans and viewers have expressed dissatisfaction with parts of Books of Boba Fett, about some of the uneven storytelling in my view, but it's now, especially after the last episode 5, seems to be on a remarkably good track. The fact that they plan to release this on the day they're planning to release it means they fully expect the final episode itself to be a blockbuster that's going to get the shareholders excited. They expect that based on what they have. So that's a good sign. And I think that because people have been concerned because of the uneven storytelling of the first few episodes, I think they're about to leak out information to get them to be ready for that.
Yeah, and I agree. And I think that's where they're going, because just for everybody's edification out there watching who doesn't understand how these work, of course, these publicly traded companies are required by SEC, Securities and Exchange Commission regulation. They have to do quarterly public reports. Now, of course, those quarters do tend to follow the calendar more or less, but of course, each of these companies has a bit of wiggle room as far as when these are scheduled. So Disney was figuring, they were going to have somewhere between February 1st and February 20th would do the report. Well, they selected February 9th. And again, it ain't no damn coincidence, because that is exactly when Book of Boba Fett ends. To Cameron's point, and I want to thank my buddy out there on YouTube, X-Wing, for calling this to my attention. Y'all can go check out his channel. He does a lot of great Star Wars content. He's one of my friends and brothers from the Echo Base Network, where I got my start. Here's the IMDb page for Book of Boba Fett. So this is for the whole show. And I'm going to scroll down. Of course, we have the usual suspects of Tamora Morrison, Ming-Na Wen, Pedro Pascal, and we keep going down. Look, Robert Rodriguez even had a few bit parts in there. Jon Favreau was one of the Mandalorians. And we keep going down, and we keep going down. Oh, Stephen Root was great. I actually liked his character in that episode. I've always been a Stephen Root fan. But if we keep scrolling down... wait. What? Harrison Ford, Han Solo. Now, let me stipulate, because I have said this before, IMDb Pro is not a perfect environment. It is often rife with mistakes. And part of those mistakes, I think, sometimes are deliberate. I've seen production budget values put in there that were just clearly, ridiculously, hilariously wrong. Things like that. Mm-hmm. In fact, on Book of Boba Fett's page, it showed that Bryce Dallas Howard was directing episode 4 right up until the moment episode 4 came out, and it wasn't Bryce. She did episode 5. So there's always some red herring misdirection on there. But here we are right now. Freaking Harrison Ford has been plugged in as Han Solo. Now, I don't know if this was put in by Disney. I don't know if this was put in by some random user with an IMDb Pro account like me. But we've talked about rumors before, but this, I fully expect Harrison Ford's Han Solo to show up. You know, more than likely he's going to be heavily deep-faked by Shamook, which is why they hired Shamook off YouTube. That's why he's at Lucasfilm. That's why he's specifically now at ILM, Industrial Lights and Magic. We know he's doing it for Indiana Jones 5. It makes total sense to do this for Star Wars as well. We had rumors that Harrison Ford was lurking around the sets with Favreau for Book of Boba Fett. That doesn't mean he was in front of a camera. I honestly don't think he would be. There's no point.
Which would be a voiceover role.
This would be a voiceover. Yeah, there'll be voice mapping. Yeah,
and we should also note that, again, assuming that this is not some rando just putting that in there for fun. Right next to it, it says it's for one episode. So as many of us have predicted, it would be a climactic moment like Luke Skywalker's return in the final episode. And for the Book of Boba Fett, that's natural because Boba Fett and Harrison Ford are historical adversaries. Boba Fett had him frozen in carbonite and taken to Jabba and fought Luke Skywalker before he fell in the Sarlacc pit. I'm sure Han Solo has a lot of bad feelings about that. Boba Fett may have evolved in the years since that has happened. Not so sure Han Solo has. And so it'll be interesting to see how those two interact after that history that they have. And it's an inevitable thing if you're going to make a story about Boba Fett that they at least have to cross paths. So it seems more likely to me than not that this is real.
Yeah, I would totally agree. I mean, we know Favreau's MO on this kind of stuff, and it is what it is, and he's done a good job with it. I realize a lot of people, including myself, have lamented some of the slow pacing of the early episodes, especially of Book of Boba Fett. But you know, as I discussed in my last video, something bizarre happened with episode 5. You know, something changed dramatically in the writing, the production value. Everything was so starkly different. It's like they had two completely different, disconnected units filming this show at the same time. And I'm hoping that this portends that Favreau was deeply involved in the final 3 episodes and left the rest of the show running to Robert Rodriguez for the first 4 to kind of get him there to fill in the gaps while he focused in on whatever huge arc, supposedly at this point it could happen between what we just saw this past week and in the next 2 episodes. So we'll find out. A lot of good stuff to come. So Cameron, thanks for coming on today. This has been a blast. I think there's a lot of good stuff coming for Disney. Changes, or at least good stuff. I say that meaning we're going to see a lot of news. We're going to see a lot of things shifting. I think there's going to be a lot of interesting conversations to be had in the coming months and years ahead. But please, everybody out there, make sure you're subscribed to Kamran Pasha's Patreon channel. This is where a lot of these conversations start. This video will probably be coming out Monday or Tuesday morning. So, Cameron, you might have an article on Patreon by this point. But any final thoughts before we check out?
I think we're at an exciting moment. I think there's the community has been burned pretty badly over this very abnormal period of the last 5 or 6 years. We've been through very bad storytelling and people with actual agendas to destroy our stories as part of some personal ideological thing. That's not normal in Hollywood, and we've gone through a very abnormal period, and that's left us very scarred as a fandom. But all the events that we're seeing, even if one chooses not to believe rumors about Susan Arnold having an explosion at her employees, even if one says, I don't believe that, what you can believe is things like Ms. Quadrani being brought in, who was a Wall Street investor for 14 years, and the person sent by top investment company JP Morgan to analyze this company, Disney, for 14 years, is coming in to serve as investor relations and also as advisor to Bob Chapek on the finance of the company. That's a major change. And you have to look at those objective facts that are not just theory and rumor and someone emailed you a story. That's true. That means something major is happening at Disney. They are trying to course correct because the money people require them to course correct. And so I would continue to say to the fans, do not lose hope. Do not give in to the black pill. Do not give in to the presumption that everyone is out to destroy your entertainment. There are people out there that wanted to do that, but the economics of the world are reasserting themselves, and that's a good thing.
It is, and like I said, we're gonna see a lot of new stuff coming down the pike for sure. So stay tuned to this channel. Stay tuned to Cameron's Patreon. It's great to see everybody today. Again, please, if you are like one of the 60 or 70% watching one of these videos that are not yet subscribed, please, we hope that you will hit that like and subscribe button, hit that notification bell, share this sucker out on the social medias, and do leave a comment before you head out, of course. We try to respond to as many as possible. It's a huge help to the channel. We're almost at 5,000 subscribers, and
Wow.
we are coming up on our 1-year anniversary. We'll be having a live stream, the first live stream on Valiant and Renegade this coming Thursday, so stay tuned. We'll send out some news on that. And until next time, it's great to see everybody, and take care.